Hey everybody, this is Jose. How are you, everyone? This is a quick sound check. Can I have a quick confirmation on the chat box that you hear me well? A quick hello, a quick good morning would do, so I know you hear me well, and therefore we are ready to start. We got 15 seconds, 10 seconds more or less. So, yeah, let's confirm that all is good to begin. Thank you so much. Thank you, Mark. Good morning from Northern California. Very good. Very, very good. We are live, everybody. Let me turn on the video stream as well so I can say hi from the corner here, as always. Giving as much space as possible to the charts on the right, on my right side, which is the left side on the screen. Anyway, how are the fires in California, Mark? Is it much better now? I'm guessing there's still some going on, but I'm guessing at this time it should be better. So, welcome to the session, everybody. Today is September 17, 2020. We are getting together to go over some longer term opportunities in the market. So, we're going to be looking at the options markets. We're going to be looking at directional and non directional opportunities, see what the market has to offer. And as always, I would like you to please take your time to read carefully the disclaimer before we begin. So, let me highlight it for you so you don't miss any word. Okay, here we go. Video clips, demonstrations are for educational and instructional purposes only. So please read everything in the disclaimer so you are well informed. Very good. Very good. How are you, Faramon? Good to see you as well. Wonderful, everybody. So let's get started with our session. Session is now officially introduced. Quick one before we begin, just in case you don't know. I would say that you should know at this time, but just in case, let me bring a browser in. Here we go. Oh, here we go. Here's TradeStation 2. Cool. So let me bring a browser in very quickly on the main screen. Here we go. This is our webpage, okay? And I'm pointing at the get together calendar just to point specifically at Monday, 21st of August as the date when we begin our Forex class, okay? It's a 5-day class. It's been a while that we didn't run the class. So we are certainly excited to run the class with Andrew starting on Monday, okay? If you are not registered for the class, it's very simple. You go to the join page. On the right side, you have courses. So you can select the live online class. And let me show you a little tip for you to get the class a bit discounted if you wish. So you can select the date, 21 of September, which is 233. But there is also something that we call the discounted date, which is to be determined. So normally what we do here is that we look at any future date where there is availability, and we add you to that date. In other words, instead of you choose the date, we choose a date for you. And then the class, instead of 233, is 89. Okay. The good news, and the reason why I'm pointing at this, is that as of now, I've been told that there are still seats available for the 21st. Therefore, even if you select the discounted date, you would very likely be put on the 21st of September. Okay. So if you want to attend the class on Monday, make sure you do it and you'll be ready to go. Cool. That's it. Again, given the fact that Monday is around the corner, I thought of pointing that out. Okay, let's begin with our session. I'll start looking at the S&P. Probably, if you guys are looking at the markets, probably you have seen the markets have been quite aggressive today, opening with a very powerful gap to the downside. And the moment price went down, it turned around and started going up. It's looking like it's going to the moon. Okay. Cool. So it's nice to see how powerful. It's not surprising, but it's nice to see how powerful the market is. We are in a time where volatility is certainly out there, both in both directions, going up and going down. We've seen it before with very large gaps ups, very large gap downs, very fast moves up, very fast move down. So again, we are at a time where markets are volatile. Okay, and this is something to be respected. Because if not, you can get hurt. Okay, so everybody, it's great to be excited. At the same time, everybody, please be safe and respect the markets, because 2020 is not a joke, and it keeps proving it many times during the year. Okay, Cool. So having said that, what's happening to the prices of options? Okay, what's happening to the prices of options? So the markets are rallying very, very hard, and even though the markets are rallying hard, we first had a gap down. So notice, a little bit of a contradiction, if you wish. The market gapped down very aggressively, but you can see how the VIX, was not necessarily that high. It was about 28, and as the market turned and started moving to the upside, the VIX is now collapsing from 28 to 26. Still decent volatility, really, if you think about it. It's not like it's bad volatility, 26, and we should be able to find okay opportunities, especially when we deal with selling options. That should be okay. Apart from looking at what's happening in the market, as always, very quick, I will also want to review some of the trades that we have pointed at in the past. And here's a trade with Nike, where you probably remember this trade. I mentioned it many times, and still will keep mentioning it for a little longer, since we still got at least 1 month to go until those options expire on Nike. But on 10th of July, we got into a trade expecting Nike to fall, and we were absolutely completely wrong. It went all the way in the opposite direction, and by the way, from 100, it went all the way to 118. That's a 20% increase in price of a stock. This normally happens in a year, and it took place just in a month and a half. So really powerful move in the case of Nike. We were totally wrong on the trade. Absolutely completely wrong on the trade, and this for sure will happen from time to time. Now, with this said, about what's happening with Nike, it is also important to realize that when we trade, I always point at that, we don't take one trade at a time and that's it. We build portfolios where multiple positions offset other positions. So you may be long some stock while you are short another stock. You may be directional and buying premium, doing debit trades, suffering time decay, where at the same time you are doing credit trades such as iron condors or credit spreads, where you are non-directional, selling premium, collecting premium, and therefore enjoying time passing with positive theta and enjoying time decay. So again, all of those things are happening. But keep that in mind. So you would be running multiple positions here in your portfolio one at a time, and therefore this trade with Nike, which is moving against us and is showing $363 of loss. The good news is that it cannot lose more than 385. That's the good news. It's lost almost the whole thing because Nike went so far away. We talked about this a few times already before. But again, this trade is right there because if the market was to collapse, this trade may go back to breaking even or profitability, and therefore it acts as a hedge. So you want to envision and visualize, I should say, all those different trades that you run in parallel as trades that offset each other. So I will be reviewing all of them. While some of them are not profitable, like Nike, it's still a useful trade because at some point it was acting as a hedge against other trades that were profitable, that we closed already, that were trades to the long side, like Microsoft or other trades that we have closed before. Cool. So anyway, next one that we have is FISV, which is a non-directional trade that we put together on August 27. This is a trade with an expiration date set as of October 16. So that was a longer term Iron Condor. It was like around 40 days or something like that when I think I calculated that. In other words, it's not the classical type of Iron Condor that we do. Normally we do 1, 2, 3, 4 weeks. That one was like all the way to October 16. But certainly it's valid. The bet in this trade, let me add more bars to the right so we have some more space. So the bet in this trade was to remain between the vertical lines, which is August 27 to October 16, to remain inside the purple area. And as of now, as you can see, we are in the purple area, so this trade is working well. We have a similar trade as well in the account, which is SPG, which you can see is showing a little bit of profitability. That one is enjoying positive theta, meaning that it's collecting time decay. And SPG is just a bit lower here. It's a similar setup, similar scenario, where we entered this trade. In this case, it was September 4, also using October 16 expecting the stock to remain in the purple area, and as of now we're fine. You can see the beauty of the UFOs, that UFO slowing down the price, going back down, a green UFO that appeared. So if it goes down, it's likely going to stop and turn and spend time in the purple area, waiting until we reach October 16th. Okay, so as of now, those trades looking good. What about now? Okay, now actually was not a trade that was looking good. It's been a trade that is challenging. That one was not pure non-directional. That one was a neutral trade. What we want is simply, we want that stock to remain above 445. That's what we want. Okay, and notice that it's been below 445 multiple times, and every time it goes below that price, it goes back up. So again, the price points that we selected thanks to AutoUFOs were, let's call it, powerful, in the sense that you can tell that it's a relevant price point, but at the same time, the fact that it keeps challenging, and the fact that we got red UFOs right there, it's certainly making it a bit difficult for this trade. The good news is that this trade expires tomorrow, Friday 18. So as long as we just stay above the purple line just a little more, then this trade is going to be a full profit. Okay, even though, to be honest, anything could happen, because we are very close to the purple area, and we still got 1 day, let's call it 1 day and a half to go until tomorrow. So we'll review that next time we are together in the channel and see how it went. SPG, I talked about it. Beyond Meat, that's a trade that we put together the other day as well. So this is a trade that is also expecting the stock to remain sideways in the purple area. Notice that we started 910. We are shooting for October 19. Did I make a mistake there? And it should be October 16. Yeah, 19 cannot be 16. So I just made a mistake there, guys. Oh, I know what it is. Yeah, I just went one candle too far. See, this is what it is. So October 16. Here we go. Okay, that's the same expression and I have it written here, by the way. Octa. Let's see what happened with Octa, because that one, given the violent volatility in the market, it's kind of like being a bit challenging. No? Now, thanks to those UFOs, thank you very much, Mr. UFO. Price was gapping down, like the market was gapping down very aggressively, and that UFO is bringing the price back up. So hopefully we're gonna survive the time risk until tomorrow, which is when we reach the next line, which is September 18, and therefore this Iron Condor will be fully profitable on Octa, which I would say it looks reasonably good, even though given the violence of the markets in 2020, you never know, we may have a very aggressive gap to the downside tomorrow. But certainly the UFO is still there, and I would say we should be fine. We'll see tomorrow. And PayPal, which is a very similar trade to Octa, that one is showing a bit more weakness there, and unfortunately, the UFO that we had at this price point has not been strong enough to really turn the price. Okay. Good news is that there is another UFO below. So if the market was to collapse, that UFO is probably going to bring it back up. And if that's the case, then we will end up still in a profitable situation. Okay. So that one is, I would say, a bit less than 50-50. Really, it looks a bit more challenging. But again, we will see tomorrow. Okay. So those are the trades that we have running, that we have been planning in past sessions, and I love to point at those trades, not only for the ones of you that are in those trades and you know what to do with them, but also because I am going to be planning trades of a similar nature today, so that way when you see me build the setups, you recognize and you understand what I'm looking for, especially if you are newer to options. Options give you options. I always joke and say that, even though it's not a joke, really, it's true. It's like that. Options are amazing, but also because they give you options, they are also more complex, right? So if you are newer to options, at times it may be a bit overwhelming, and hopefully these reviews are killing two birds on one stone, which is to review the trade as well as clarify trades that I'm about to plan. Okay, here we go. Just looking at your comments, Mark, I hit 50% profit on SPG on Tuesday and you closed it. Very good. That's a very thorough and very rule in the channel, Mark, and for everybody to know, I am just being very simplistic. I'm just entering the trades and closing my eyes and waiting until the expiration date, which is not the best way to manage those trades. Okay, but in order for us to do something more advanced, we will need to spend more time together, and we have limited time in the channel, so I'd rather keep it simple and you guys can follow. And of course, we do more and more advanced option stuff in the You Can Trade channel as well, which you can certainly join and go a little deeper into options trading and other things that we do. But again, worst case scenario with the Iron Condors, the most you can lose is limited, so it is not a crazy thing to close your eyes and wait. While I'm with you, Mark, I like your approach to be a little bit more dynamic in the management of the trade. Does make sense. Koyo, how are you? Good evening from Kota Kinabalu in Malaysia, Mr. Jose. A pleasure to hear from you from Malaysia. That's a real pleasure. Very nice. I'm not sure I've seen you before in the channel, so it's very nice to have you. And if I'm right and you are in the channel since very little time, and I haven't seen you before, or I haven't noticed, which could be too, then I welcome you to the channel, as well as if any of you are watching this recorded and it's your first time, for sure. Super happy that have you guys part of what we do. Anyway, with all of this introduction that took me around 15 minutes, let's get in trading mode and let's look for opportunities. Okay, so since the levels of premium in the market are decent, let's begin with non-directional trades like we have been doing in recent times. And while I'm going to skip the Google trades, I'm going to start with Shopify. Why am I skipping Google? Well, very simple. My assumption, nothing wrong with Google, by the way. Okay, actually, it's a fantastic stock to trade. But at the same time, my assumption is that the majority of you guys here in the channel are in learning stages, and obviously, given the price of that stock, which is one of the most expensive stocks in the whole US market, so that would force you to either not be able to trade it because it may be too large as a size for a learning trader, or you may need to execute with paper money, which, while it's fine, it's not exactly real, especially in the world of options where liquidity is limited. So I rather find opportunities which are a little more reducing risk. That way, if you want to execute live, of course that's your choice, but at least you can do it with a smaller size. Or if not, you can always use paper money too. But I don't force you to use paper money if you want to use real capital as well. Okay, so I'll start with Shopify. Again, it's also a pretty high price point stock, to be honest. Okay, but it's half the price of Google, so we'll start there. Okay. So what do we have with Shopify? Okay, well, first thing when looking at Shopify, it's the fact that earnings are going to happen in October 27. Okay, October 27, and that means that we have over 1 month of time for us to do a non-directional trade. So that's a good beginning. Second, good news is that UFO performance stats are 52%, and that being above 48%, it's giving us a go-ahead. We have a green light to go ahead and begin planning on a non-directional trade. If that value was below 48%, we would just discard that stock altogether and go for another one, because less than 48%, we don't even consider it. Okay, so 52% is certainly valid. And then the last thing I want to point before we begin with the planning of the trade is that we have multiple UFOs above. We need at least 2 UFOs above and at least 2 UFOs below, and we do have multiple UFOs both above and below. Therefore, we do have an opportunity to put together a trade on Shopify and see if the rules are met, and therefore it's okay for us to execute or not. So I'm doing a little bit of cleaning, okay? So we can do this trade. The current price of that stock is around 860 something. So what I'm going to do is go ahead and type Shopify, load it, see what are the expiration dates available. Of course, the shorter the better. September 18, which is tomorrow, may be too tight, but you know what? I'm going to give it a shot. I'm not sure. We'll see. So anyway, we got $5 strike price increments with 1 day to expiration, September 18. So what I'm going to do is analyze and sell, and I'm just going to pick an Iron Condor, just so I have an opportunity to add my measurements of +1 and -1 standard deviation using September 18 And when I do that, basically it's pretty neat because now Option Station Pro is giving me a guide, is giving me a reference point, which is what is the highest price based on probabilities where that stock may travel to, and what is the lowest price based on probabilities where that stock may travel to the downside from now until tomorrow expiration. And that is 903 and 834. So if I was to go back to the chart and move to 834, so 834 is somewhere here, okay, and 903 is somewhere here, something like that. Okay, it's actually lower than that, but good enough. So in other words, I could go ahead and say, okay, so I got 2 UFOs above and I got 2 UFOs below. So if I draw my line here and I draw my line there, and I expect from today until tomorrow that Shopify, from today until tomorrow, that Shopify will stay within the range, I would say that's probably a very high probability trade. It's looking very good to me. I got 2 UFOs above, 2 UFOs below. I need to look at the pre-market and post-market session, by the way, which I haven't. I will in a second. But really, beyond all of this, my main concern is how much I get paid if I sell the 940. Okay, and probably I get paid too little. Okay, so if I load all strikes and I look at the 940, so the 940 is paying me 48 cents. 48 cents, and if I buy the 945, I have to pay 35 cents. So really, the difference is not enough, because we are risking $5. You probably remember from prior sessions that we have a rule where we want to collect at least 15% of the raw risk in premium. Okay, the raw risk is 5. 15% of 5 is 75 cents. Okay, well, the difference of this, okay, 48 to 35, it's 13 cents, right? So let's say that's what we get on the call side. Let's say on the put side you get more or less the same. So 13 and 13 is 26, which is way less than 15% of 5, which is 75. So again, I always like to look at next day expiration options in case they work. The reality is that they almost never work. So we're gonna start the trade again using September 25, which is 8 days to expiration. And now I would say that we may have something. Okay, so let's switch expiration date from 18 to 25. 1, 2, 3. This, of course, changes everything. Now is 943 and 792. So let's move into the chart now and move my reference line to 940 something. Okay, that's good enough. And 940 something and 791. Oh, sorry, I just clicked in the wrong place. And 791, which is somewhere here. Okay, somewhere here. So in other words, statistics suggest that price will remain between the dotted lines, even though I'm not precise with the location, is good enough. But the reason why I'm not precise right now is because it's really not needed at this moment in time, because what I want to do is I want to place lines where the UFOs are. So I got 1, 2, and 3 UFOs. Now, of course, that UFO there is so far away at 1,000. So it's so far away that, of course, the trade is going to be so likely, so high probability. But at the same time, the premium I'm going to get paid is probably going to be way too little. And the same thing happened with that UFO that is also very far away. So anyway, I got my lines. I got 3 UFOs above, 3 UFOs below. And what I'm going to do is move to pre and post market, which I have not done earlier. I need to make sure my 52%, maybe less, but it needs to be at least 48, which it is at least 48. And we're going to have here a few more lines to be drawn. We have another UFO there. Okay, we have another UFO here. Okay. This line needs to be slightly updated in the pre-market session, and that UFO, notice that the inner circle is outside. Okay, this is a strange case that happens from time to time when the app picks up divergence in orders, and orders are potentially in different places, and therefore the circle extends outside the band. Okay, but anyway, so this is what we have. So all of those are the lines. So if I go back to regular session, and even to make it simpler, I was to disable auto UFOs now. So what I would like to do is pick up from the current price, which is here, measure the nearest UFO beyond the dotted line, which is this one here. Okay, and as I have done this, I would want to, let me change the weight so it's more visual for you guys. So I would like to project this price to the upside. And unfortunately, I'm not meeting any UFO but that one. Okay, so in other words, the best I can do here with Shopify, if I use that expiration date, would be to rely on a range, as you can see, from 1030 to 741. Okay, and again, my concern is that I may get paid extremely little for 1040, which is $1, and the problem is that now I'm having lack of liquidity, 75 to 135, and it's having me pay 105. So again, the only way to make this trade work, okay, we have a problem here with liquidity now. The only way to make this trade work would be to point at October 16, because October 16, it's the monthly expiration date. You can see that there is no, the word weekly is not there. So that's a monthly expiration date. And monthly expiration dates normally are more liquid. Okay, so if I was to look at the 1040, for example, not only I will get more premium, but typically I would have better liquidity. Okay, even though it's not super, but I got better liquidity. Okay, but again, it's not super. I have a feel that we're gonna waste our time, and we only got 20 minutes left before the session is over. So I'm just gonna pass on Shopify. It's getting a bit too complicated. The UFOs are too far. Liquidity that far is not so good. So yeah, we're gonna go for the next one, and hopefully the next one will be a good one. Okay, so going back to re-enabling auto UFOs, and now instead of Shopify, I'm gonna click on Alibaba. I'll skip now, and the reason why I'll skip now is because we have a trade running. So I'll go for the next one. And now when looking at Alibaba, notice I got 44% if we are looking at regular session. And if I look at pre and post market, 44 becomes 49%. So 49% is something I am keen on using. 44 is something for me to ignore, okay? So we'll be using pre and post market data on Alibaba to plan on this trade. Earnings for that stock are on October 30, okay, as you can see. And that is obviously good news that allow us to go ahead and plan on the trade. Okay, let me take a look at the chat box in case I'm missing anything, and I'll come back to this trade with Alibaba. Yeah, it's good if ACL and auto UFOs can use in Android. ACL. I'm not sure what you mean by ACL, Koyo, but certainly you can have the auto UFOs on Android because auto UFOs also work on the TradingView platform, and the TradingView platform has a how do you call it? A mobile version of the app. Okay, so you can certainly do that. Okay. The free trial for auto UFOs actually comes with the courses. Okay, so 07. Earlier at the beginning of the session, I'm not sure if you were with us at that time, so let me mention it. Speed of the light very quickly. So I am loading our website on a browser window. Okay, so here is our website. So if you click on Get Together, okay, on Monday 21st, there is a Forex course that begins. Okay, if that day doesn't work for you, it's okay, because the Forex course, apart from available live online, which is on the 21st, is also available on demand. Okay, so no matter if you use the on-demand course or the live online, any of them, I'm just gonna click on demand just as an example. So if you read the description of the course, you will say that here it says that trading technology, the auto UFOs and the auto climate trading apps for TradingView will be activated complimentary and will remain active during 3 months to allow for practice time starting on the purchase date. Okay, so the way we give you access to a trial is by purchasing a course, because if we give you access to the app but you don't know how to use it, it's a complete waste of time. So we basically teach you how to use it in the course, and then you can continue utilizing it for 3 more months to have a proper evaluation of the app and yourself as a trader if you have never traded before. So you know if trading is something for you or not. Okay, cool. Back to the trades, my friends. So Alibaba. Okay, so we are looking at another non-directional trade with Alibaba. We said earnings being October 30 gives you plenty of time. Okay, so given that fact, we can go ahead and load Alibaba, and we're gonna do the same thing as before. Of course, the shorter the time to expiration, the better. So I'm gonna start with September 25. Okay, it could be any other date, but I'll start with September 25 and see if Alibaba is gonna give us a good one in this case. So good news here, and this is certainly something I appreciate very much, is that instead of $5 strike price increments, now we have $2.5 strike price increments. That's going to make the trade potentially less risky, depending on the strikes and the liquidity. We'll see that, but typically you would have a better trade with less risk, and therefore it allows you to practice it better, in the sense, especially if you are newer to trading and you want to trade small size, this could be a better bet. Okay, so let's take a look at that. So we have Alibaba, our minus and plus one standard deviation points at 259 and 290. So if I go back to the chart and I draw a dotted line at 259, okay, 259 is more or less here. Okay, and I make this line to be dotted. Not like that. And then the other one was 290. Okay, so 259 and 290. And again, those are reference lines. Okay, so I don't need to be super precise. So 290 right there. Okay, so this is statistics suggest that Alibaba should remain in the range set by the dotted lines from now until September 25. Okay, and with this in mind, remember the methodology is asking us to look at least 2 UFOs above and 2 UFOs below. So that would be UFO number 1. This would be UFO number 2. Okay, and if I was to point at below, this would be UFO number 1, number 2. But those UFOs are not beyond the dotted line. Therefore, I need to go for this one. Okay, this is my first one. Okay, now if I do this, okay, and I measure the distance from the current price to the top part of the range, notice I'm replicating what I did before. Okay, trading is all about being mechanical and repeat. Okay, so I'm doing the steps. Then you can watch the YouTube video again, play, pause, rewind, so you can replicate that yourself. Okay, so if I move it down, okay, and I project the same range below, well, notice that really if I want to be equal distance from the upper line to the bottom line, really the very, very precise way to do it would be to rely on the next UFO, which is just a bit lower, because now really the range set between the proper lines, it's exactly putting the current price of that stock in the very, very, or almost exactly in the middle point. Okay, and that's great because you are maximizing the amount of time before being proven wrong, and the more time you spend in the trade, the more time decay you would collect. Now, 925 is right here. So let me be visual with 925. This is 925. And therefore, the bet in that particular case would be that the stock, we don't really care where it is going. We only care about the stock remaining in the purple area. And as long as the stock remains in the purple area, starting today, all the way until September 25, so then this trade would be profitable. Okay, so all of this is looking good for now. So let's take a look at how much we get paid if we sell the 292.5 call. So looking at the 292.5 call, I would expect it should be okay. And indeed, it looks okay. 96 cents with good liquidity, only a few cents. Also for the next strike, a bit less liquidity next strike, but nothing too bad. So it is indeed looking good. So let's make a few notes on the chart. And we will complete the planning of this trade and see if we can approve it or not. I would say it's looking good for an approval. So 295 call, that one we buy, and the one below we sell, which is 292.5 call. Okay, and this is using expiration it's September 25, 2020. Okay, and earnings, as of now, earnings is something you need to keep an eye on it because they may change. Okay, the earnings are kind of posted or declared, but then they will be confirmed. And the day they are confirmed, then the date becomes official. While they're not confirmed, the date could change. Okay, normally it doesn't change much or doesn't change at all or not likely to change, but it could. Okay, so you don't want to be how do I put it? You don't want to be overconfident. Okay, you want to always to go ahead and review that. Okay, so we're gonna be selling the calls above. Okay, and then we're gonna be selling the puts below, which is looking like it's gonna be the 255 put. And if that was to be the case, we would then buy the 252.5 below, assuming all those strikes are available. I need to go ahead and confirm this now on the screen. Okay, cool. So let's do it. Analysis. We're gonna start with the call side. Okay, and for the call side, we said that we are going to use 295 to 92 and a half. So 295 and 292 and a half right there. And for the put side, we said 255 and 252 and a half. So 252 and a half and 255. So my friends, I believe this trade is I believe this trade is valid. Let's do the math properly, guys. So I make no mistake. So let me explain everything. So first of all, the strikes selected on the chart, okay, the strikes that we sell are the 292 and a half and the 255. So the first thing I need to find out is how much I get paid for the 292 and a half, which is 90 cents, and how much I get paid for the 255, which is 1.03. And this is valid. Why? Because one of our rules is that when we sell an option contract, we want to collect a minimum of 35 cents. That's more than 35, it's $1.03 or 90 cents. So that first rule is met. Once this first rule is met, this opens the door to check the second and last rule, which is what I mentioned earlier, which is that the premium we collect is at least 15% of the raw risk. And how much is the raw risk? Well, the raw risk in this case is 2.5. Okay, so we need to collect at least 15% of 2.5, and if that's the case, we'll take the trade. So here's 2.5, and here is 15% of 2.5. This, my friends, is 37.5 cents. And the midpoint is 38 cents, which is 0.05 more than 0.375. So in other words, it's right there, borderline, like really, really tight, but it's there. Okay. Now, does it mean that you place an order and you're going to get filled? No. You may not get filled because the midpoint, it's difficult to obtain. But at the same time, if you use a little bit of patience, which is important when we trade, and certainly when we trade options, so you place an order and you wait, and if the market does something a little bit spicy, half an hour later, 2 hours later, you'll get a little bit of peak of volatility, and that 38 may become 40, 42, something. Next thing you know, you got filled at 38, which is what you want. Okay, so now we just dropped to 37, but just like it dropped to 37, it may go up to 39, it may go up to 40. So you just need to have patience and allow yourself for this trade to play out. So I'm just gonna set it at 38 here. Okay, and I'm just gonna go ahead and enter the trade in here to show you how you would do it. So you would just go for the midpoint, and if the midpoint is less than 37.5, which in this case is less, you just adjust it, in this case, to 38 to make sure you get at least what you want. Okay, and notice I am using a day order type, meaning that if I don't get filled by the end of the day, then the order will evaporate from the system like you have never placed the order, and there is no exchange fees and anything like that. So then it's perfect. It's actually the way to do it. Okay, so I'm just gonna place the order since this trade is valid. Okay, and yes and yes. So the order is in the system, and then I'm gonna go back to the chart in case you want to take a screenshot, because my friends, this is the first trade that we have identified and concluded as a valid one. So let me go back and check on the chat box. And please, also, while I'm checking on the chat box, I would appreciate very much if you could give me a little bit of feedback, if you guys were able to follow this trade and the rationale behind it, the steps I followed, because of course my intention would be that after this session is over, or after you have watched a few sessions like this one, you now begin able by yourself to go ahead and, as a homework, be able to practice and replicate these methodologies. And then you may want to practice this in a paper money account or real money, small size, all of these you decide. But at least, I want to make sure that I didn't lose you. You were able to follow the process. And if I did, I need to know so I can rectify into future examples and lead you better so you can learn, okay? So please let me know on the chat box. I'm going to have a sip of water and I'll read your messages, guys. Thank you so much. Cool. Okay. Autoclimate is ACL is autoclimate. Got it, Koyo? Yes, absolutely. So let me do this. So here is TradingView. Okay, so here is TradingView. Here you can see I have a complex setup with TradingView with AutoUFOs above. Okay, you can see the UFOs there on the top, and I have AutoClimate below, as you can see. Okay, so this is AutoUFOs above, AutoClimate below, and this is in TradingView. Okay, now let me tell you that if you are using an Android phone or an iPhone, you can go ahead and download and install the TradingView app on the phone that looks exactly the same. The beauty of the Android app on the phone is that it replicates, it mirrors exactly what you have on your phone. Actually, if you draw a line on your computer, then you turn on the phone and the line is there. If you draw a line on the phone or you make a note on the chart on the phone, then you go home, you turn on the computer, and the line is there because it's totally synced. So the TradingView on the computer and on the phone is totally mirrored. In other words, if you can see AutoUFOs on the computer because you are a subscriber of AutoUFOs, or you can see AutoClimate on your computer because you are a subscriber of AutoClimate, you can also see them on the go when you are using your phone because the TradingView app is giving you the same features and performance and benefits and everything else as the TradingView app on the computer, which runs in a web browser, as you know. Okay, so the answer, long answer, but the answer is yes. Okay, Koyo. TOS says that the 92.5 strike is not trades. Interesting. And you are talking about the same expiration day, right? Yeah, I think that's very weird. Maybe a problem there because you can even see there is volume traded, okay, today and the prior day too, and there is open interest. So it may be a bad tick there, Mark. Okay. Yeah, I hear you. 292.5. Yeah. Certainly, it looks good for me. So not sure what that could be. Certainly, if you are taking this trade and you are taking with real money, you may want to give your broker a call and confirm. Yeah, it's looking totally normal on my end. Okay, so as you can see, cool. Okay, so what else do we have? I'm looking at the time. We got 3 minutes left. So really, 3 minutes. I'm afraid would not be enough to be able to plan on a trade. So let's take a look at what's going on in the market. Have a quick look. Yeah, market going back down. A UFO has just been formed today, so that may help for the market to go back up. Yeah, pretty powerful move to the upside actually, what the market has done today. So VIX, yeah. So VIX is top there. Yeah, yeah. So nothing major for me to comment on. Yeah, all good, all good. And certainly, guys, the trade, that we just mentioned here, Mark, you just got me a bit concerned. Let me double check something, just in case you guys. Oh, I'm just turning on TOS as well myself. Is installing updates on my other computer screen. So let's be patient just for a second. I just want to load it myself too, to see if I see the same thing you see. I don't want you guys to get in trouble. I mean, normally, market data you see on an option chain is coming from the exchange. So what you see is what it is, okay? And this is moving data. It's not even like it's static, okay? It's moving now. It's pointing at 0.88. So I'm 99.9% sure this is valid stuff, okay? But just in case, let me check Alibaba, and let's look at this September 25, and yeah, I do have data for that expiration date, Mark. I do have data. Okay, 290 Okay, you have data there. So not sure what may be happening on your end, okay? But yeah, I would say it would be prudent to call your broker or even restart your computer, okay? Cool, very nice, very nice. 07, any forex trades? Well, let me show you something as well, because today is not a forex day. Today was an options day, but we do a lot of forex in the channel. Okay, so let me show you guys a little bit of the tools. Sometimes, I get in trading mode and I just go for it and that's it. Sometimes, to be honest, I should do a better job at times at showing you the various tools that you have available. But like, for example, you see on the calendar, anytime you see nailing effects, those are sessions that we do specifically for forex trading. Okay, earlier in the day we did one. Okay, but now we are doing the longer term. Okay, so just keep that in mind. Okay, so nailing effects we do plenty. Okay, and also you have access to different instructors. So the next one is going to be with Bert. The next one is going to be with Pedro Mejias. The next one is going to be Andrew. Next one there is going to be Bert again. So again, you have access to multiple instructors and also at different times. Okay, so make sure you watch that. Okay, cool. Yeah, so I think that we're gonna call it the day, guys. A pleasure to have you join me in the session. Hopefully the session was productive to you guys, and you enjoyed it very much. We'll see what happened with the Alibaba trade. It's looking quite good, to be honest. I mean, it meets our rules, so we took it, isn't it? But really, the range looks, at least visually, quite wide. And even though the market is quite volatile in recent times, it is looking like a pretty probable trade. That's the beauty of volatility, by the way. That the more volatility built in the options, the wider the range you can afford, and that makes your trades to be more probable. Okay. Again, don't be overconfident. Okay, it doesn't matter if the trade looks probable or not. Anything could happen anytime in trading. So the beauty of an Aaron Condor is that the most you can lose is limited. In this case, it's $250 for this trade because the strike price increments is $2.50. But again, you may have additional rules for trade management, like Mark mentioned before, to close the trade ahead of time and things like that. So if those are your rules, make sure you manage your emotions, and when it's time to act on your rules, act on your rules. Okay. And if you have no rules, then you just need to wait until September. Let me say that again. Yes, September 25, which is the expiration date of the option, to find out if you had a profit or you had a loss, which is when the trade concludes. Okay. Cool. Everybody, you guys take care. Again, super pleasure. Keep up the good work. Shoot emails to us if you have any question you need support or anything we can help you with. And see you in the next one. Take care, everybody. Bye-bye.